Regarding your question, in my opinion, we are past the point of hype, and we're more into the point of execution. It's kind of in most technology developments, you burst onto the scene with a lot of promise and a lot of hype, and then the companies actually have to execute. And we are now in the execution phase. If anything, I would say we are at the point of skepticism right now in the fintech world, where a lot of the leading fintech companies are more viewed as, can they make it? What I've seen in many internet industries, having invested in about 200 internet companies in my career, is that this is a common wave, it's a common trend that I've seen in many different categories of the internet, and it's happening in fintech now. I think that the leading players will emerge, and they will establish themselves as leaders in the financial services industry when it's all said and done.
Interestingly, I just want to share a story I heard, and I know as part of the Postal Savings Bank experience. So Postal Savings Bank has just been listed in Hong Kong. It's one of the largest banks in China, with about 40,000 outlets across China into the most remote areas. I was visiting one of their branches recently, and they told me the story that one of their busiest time is over Chinese New Year, when millions of migrant workers move back to the countryside. And what they would do is their hard-earned cash would be deposited in the local rural postal savings bank outlet. And it was during those 24 to 48 hours where they have to handle millions and millions amount of RMB, and as we all know, the biggest note is 100 RMB. So literally they would have rooms full of cash where they have to deal with the security, the logistics of moving those cash within that short period of time, and the safekeeping in their global system. So on the one hand, you would say there is a huge amount of room for improving that efficiency, that ultimately China will move to a point where you don't need to handle such a huge amount of logistical exercise. And yet, on the other hand, you would say this process is likely to take many, many years, and that during this interim period, an institution like the China Postal Savings Bank could still be playing a very critical role in both the serving the mass rural population and being the intermediary of channeling those reserves and deposits into ultimately the investments and lending into the corporates. But during that transitioning period, I'm sure there will be continuous refinement, technological improvement, where they could work together with the technology companies. So in my view, it is a complementary rather than a direct substitution or short-term major disruption.
I'm gonna put Raymond Young on the button here and ask the question I think everybody really wants to know, which is that, as Raymond just said, this idea of making the decision based on your customer is largely driven philosophically as to what actually you produce and what service you give. But there's always a cost to that service, as we know. So I think what I'd like to ask Raymond is, at what point do diminishing margins, which we've seen actually quickly diminishing margins of the onset of technology into what was very much always a business that was supported by technology, but now that may be led by technology, as the margins diminish, have we gotten to a point where we've reached some sort of foundation level here? Are we at some diminishing point of no return? What's your feeling on where we stand today on margin and what you see in the near term?
Okay, thank you, Greg. Good morning, everyone. My name is Raymond Qu. I'm the CEO of Era Capital, one of the key shareholders in AMTD. In this whole digital economy, I think the important thing is about volume. is about your company's survival. Whoever has the most capital and whoever has the most successful business model will survive at the end of the day. One of the key aspects that would tell the successors versus the losers are, in my view, how they navigate through the complex regulatory regime that are facing the financial services sector. I think this concept of corporate governance around which investors they have and how are they transparent to shareholders and the customers being the most critical part of success of a fintech company. As far as margins are concerned, I'm not too worried. I think the customers will tell who are the winners. Because if the companies are well run and they have a very successful winning model to drive the efficiency, transparency, and customer satisfaction, at the end of the day, customers will ultimately choose the winners and not so much about just maintaining a margin. In the old days, the banks have a monopoly because of regulations. Now, regulators these days are seeing that the traditional banking system cannot and will not just be able to serve the community. And therefore, the onset of fintech companies will actually fill the vacuum that in the past, customers would never be able to experience that kind of solid and satisfactory experience. Thank you.
I have been in this industry for a long time. I graduated, I nearly forgot, 86. So I have been in the accounting industry for 30 years now. This is actually my 30th year. I think I have the fortunate experience of seeing a lot of the legal and regulatory rules to be set up. So around 84, when I was in the UK, and that was when the data privacy legislation in the UK was enacted. And then, going forward into the mid-90s, that was when digital signature legislation was enacted. In Hong Kong, it was enacted around 99-2000. Both the Hong Kong Data Privacy Ordinance as well as the Electronic Transaction Ordinance was enacted around that time. And then, of course, 2002, we saw Sarbanes-Oxley. Now, all of that happened after something bad or something that regulator regarded needing monitoring happened. So legislation always lags behind, and the legislation, the law drafting process itself takes about 2 or 3 years, sometimes. And you can't basically speedily enact something unless it's in a crisis, like the 911 and so on. So regulation will always lag behind the industry. Now, you turn it the other way around. If you look into China and some of the what we call the dot-coms, the internet industry, what they are doing now, in a sense, it's actually quite scary. We talk about credit rating. So corporate credit rating is pretty much an established business, but individual credit rating is a vacuum. And so in China, what happened was people then started to get into that aspect. Now, how did they do it? Today, they actually track your spending pattern. They track your online behavior via what they call big data. What is actually happening there is using your personal information to achieve something. If you then look at what they did and try to put that into European or US context, you realize what they do were prohibited under, let's say, EU legislation, because it was, in a sense, not in full alignment with the data protection principles there. So you actually end up in a very interesting situation where certain companies' ventures today are very successful, but it existed because the underlying legal infrastructure wasn't there. So what we are seeing in China is a catch-up on the legal and regulatory kind of development. So the internet, recently enacted internet law, and various IP protection and so on, all coming to that. What's still lacking in China? Data privacy legislation. So we are seeing progressively over time a kind of enhancement to the legal infrastructure. And what that will result is new players versus the existing incumbents need to kind of find a way of working more closely together to leverage on each other's strength.
Great. Does anyone else have anything to add? That was very well said. Thank you.
Brett, I think one more thing to add is about cross-border payment. I think in China that's probably one of the most significant headaches of many corporates, given the significant restrictions imposed by the PBOC. And I know a few players in the fintech area have managed to have some successful breakthrough. And I admire, for example, Raymond Qu, Geoswift, who has been a forerunner in enabling these cross-border payment. Perhaps I think it was just Raymond give us a bit of a sharing of his key success factor.
Well, when we talk about the cross-border payments, it's always related to the regulations. That's a very important part of our business. So before that, I want to share some, not inside information, but something about China monetary policy changes. In the past 40 years, the monetary policy is always easy in, difficult out. So they encourage foreign investment, they encourage export business. As a result, China becomes the biggest foreign reserve countries. They have too much cash on hand. So there's a joke in the market saying Americans owe money to Chinese. So in the Wall Street say, if I owe you $100, that's my problem, but if I owe you $1 million, that's your problem. So it's kind of risky for the China government. So we can see that China, the PBOC, they start to change in certain ways. So the first, they reduce the percentage of the US dollars in the basket currency. So they start reduce from 85% in 2001 to 65% in 2013. So they diversify the risk of the currencies. And second, they convert cash into asset. It's just like family. If you have too much cash, what will we do? So we do some investment. So that's why you can see there are more and more Chinese entrepreneurs or China businessmen start to buy the oil, the manufacturer, or even recently the very popular they buy the soccer club in Europe. But the most important is the third one. They try to convert RMB to be a free currency. So that's how they start the offshore RMB from Hong Kong. They say we CNH. And that's the offshore RMB, which is a free currency. And another one, CNY, is domestic currency. It's still highly regulated. So that's very funny. A few weeks ago, in last year, I met one official from PBOC. She said, I really don't like the CNH. That's Hong Kongese create this term because that stands for CNY in Hong Kong, CNH. And she said, do we need to create another CNL for London and CNS for Singapore? But however, then you can see that's very important, the role for the Hong Kong to play, because that's more like a bridge, to bridge the gap between the China and the rest of the world. For the new currencies, we say CNH, the monetary policy will be easy out, but difficult in. So they want more and more people to use that currencies, but they don't want that money back to China easily, but that will cause inflation, because that's the money they print out, right? So if you remember the old policy, easy in, difficult out, and the new policy, easy out, difficult in, that's opposite. So that's caused a lot of confusion in the market. I have many friends who went to China for answers. However, they are more confused when they come back, because the different people told them the different stories or different answers. So that's very important that before you do the cross-border the payment, you need to understand the background of the China monetary policy changes and make sure you find the right partners in China. So that's the value of AMTD as well, the bridge gap between the China and the rest of the world. And Hong Kong becomes a very important city to play the role, right, for that part. So that's something I want to share today.
I vowed to not use Donald Trump's name today, but I guess there's a relevant question that I think goes along with, Trump, it seems as though, and as we know, none of this is proven, this is not, a person who's held office before, but one of the driving forces behind, which he's clearly articulated in the early days, is the repealed Dodd-Frank. So if Dodd-Frank exists in a different form, or if it doesn't exist at all, are we back to, this empire building, bulge bracket empire building regime that we went through for a period of time that was then broken down by this? Does that then cause an opportunity, or does it cause a problem for this new kind of transformation that we're seeing on the digital side?
Well, Brett, why don't I try? I saw one of the Bloomberg headline straight after the election results came out was UBS stock has its best day since 2009, I think it says. So because I still watch my stock quite carefully, that was the only day that's gone up more than 10%. So in a way, you can say that a lot of the traditional banks are having a knee-jerk reaction in terms of their stock valuation, is the expectation that there will be some loosening of regulation. So while it's good news for my personal holding, I would say it is probably the pendulum swing, where when you see a lot of these big banks are being trading at 50-60% discount to book value, that something has to change, that it would become a slightly more favorable environment. But if you talk to any of the big CEOs, are they having a very rosy picture of the future? I doubt it. I think the regulatory environment will still be very, very cautious. I think on the one hand, that pessimism has gone to a bit of an extreme, but on the other hand, with the global financial crisis still fresh in people's mind, I don't think there will be a loosening dramatically. So I think the pendulum will swing slightly, and I think the big banks would, exactly as we all said here, would embrace technology, would embrace breakthrough. UBS has been reported as one of the leaders in the research and use of Bitcoin in facilitating a lot of the process. And I think that has to be embraced by all the large banks. And ultimately, when you look at all the different industries and how innovation and R&D has developed, inevitably the large firms with the big budget of R&D would take over some of these technology innovation and started to embrace them, and they ultimately become the mainstream, and that's how R&D and how innovation becomes systemized. So I think there will be a lot of that going forward in the next few years.
Great. Yeah, my personal opinion is that a new government in the U.S. could in fact unlock a lot of this money that's been kept by corporates in cash and really jumpstart that R&D process. I mean, R&D in the U.S. has largely been a vote of confidence to the current government. If the new corporates do believe in the new government and start putting money back to work, I think it's great for the whole industry in general. So I think we have to wrap it up at this time. I'd like to have everyone please give applause for our great panelists. I think it was very insightful today. And I think, in the spirit of how Calvin looks at things, please grab these gentlemen on the side if you have any questions and ask. We didn't have the opportunity for a Q&A, but they'll be here today, and please